In this video, we're going to talk about financial scams to avoid, Forex Ponzi schemes. Stay tuned. Hey traders, a very warm welcome to you. Okay, so if this saves one or two people, this is great because these things are becoming a lot more prevalent. Now, I want to talk specifically about Forex Ponzi schemes, as opposed to generic Ponzi schemes all about Bernie Madoff, but Forex Ponzi schemes are actually more common than you think because a lot of people feel embarrassed that they've lost money to them. So what are they? How do they work, and how do we avoid them? And if we know anybody, and honestly, I've had somebody come to me and obviously they've been pitched a Ponzi scheme, tell them to steer clear of it and get well away from that kind of thing. So if you're aware of this already, then it's your kind of duty as a trader, someone involved in the financial markets who understands the game, to look out for your friends and family for these kind of sharks that are out there. All right, so the kind of warning signs we've got are that returns are just too good to be true. So this is really how they'll pitch it out to you. They'll say, hey, listen, we've made multiple hundreds of percent in the year. We don't have very many rarely losing trades, or no losing trades, no losing months, no losing quarters, however they package it. Some are going to be more aggressive. It's day trading. They might say, hey, we've got no losing trades. If it's a swing trading thing, they might say, hey, no losing quarters. They're going to show you something that really looks quite tasty on paper. And it's going to look as if, hey, if you'd stuck in 10 grand 2 years ago, you're going to have 100 grand now, or something like that. They're going to package it and present it in a way that makes it look really appealing to your average person who's not familiar with what can be achieved, what can't be achieved, and what is unlikely. If some guy is kind of operating a one-man show or two-man show, and he's generating all these massive returns, and he's supposedly been in it for 20 years, and he's kind of get your 10K, you've got to have an alarm bell and say, well, what's it worth for you? If you're taking, half, we're splitting it 50-50, why are you not trading with, 20K to get the same money? You get that kind of thing. But the point is with this is it's all about, fishing, isn't it? Finding people who are interested. When they're interested, they'll get them involved in it. Now, there's many ways that these actual schemes work. Generally speaking, what they will do is they will have a pool of people who will invest with them. Let's say people invest in £10,000 each. Let's go with pounds. They're going to put 10K in each, and they're going to get a total of, let's say 100K. And they're going to say, right, you know what? You've got to keep it with us for a certain period of time because they need, this lockup period where we've got to be careful of that, because they need it to kind of get the scam evolved. So they get 100K from 10 different people. They go along, and these are kind of the first tier investors, if you like, the first people into the game, the first level, and then they'll chug along. And maybe there's different variances of this. A lot of people, actually, I've found when I've done some research on these Forex Ponzi schemes, they think they can trade profitably and they get themselves in a mess. Maybe some of them go out to commit fraud actually intentionally, and I think some others fall into it. But ultimately, it's the same thing. They're trading money under the guise that they're going to make that person money. And what happens is they lose money, and so they go, what do I do now? They will then solicit more funds. So they solicit a second level of funds, and obviously this is not set in structure. They will constantly be soliciting for funds. And let's say now they manage to get another couple of 100 grand from some more unsuspecting people. What will happen is sometimes they will falsify statements to these first tier people who have now had their money in for maybe 6 months or so, and are saying, hey, how's the account going? They're going to falsify statements probably many months before that. But now these guys might say, oh, can I have some money out? And so what they will do is they will take the money that's coming from the latest investors and feed it back into them. So they're going to say, okay, your current balance stands at 15 grand or something. You put 10K in with us, and this is all going to be false, obviously, because they've actually been losing money, or they might not even been trading in the first place. They say, oh, you got 15 grand, do you want to take out a couple of grand just to, go on a holiday or whatever it may be? You can do that, we'll allow you to do that. I recommend keeping the rest in because you're going to grow it. And people are saying, yeah, that sounds great, send me my 2K. So they're going to send 2K back. It's going to go back to the first tier investors, and it goes on. I mean, those numbers are just plucking out the top of my head. They could say, hey, I want my money back from it, just keep my initial in, or within the lockup period, they won't allow that, but they might say, hey, I want my profit back. The point is they're going to keep them dangling. They keep them dangling by giving them little tiny bits of money, falsifying account statements, and just keeping this party going. Now, ultimately they may well pay off these guys. If this gets bigger and bigger and bigger, they might be able to pay off the early guys while still having money in and just really rotating the money like this. But generally these things will unravel because at some point in the chain someone says, hey, hang on a second, something doesn't smell right here. You know, we've had these great gains, I can't get my money out of it, you know, let me do a bit more digging. And then they maybe get in touch with other people who have invested in this Ponzi scheme, and they're all kind of saying, hey, your account statement's different to mine, why is this? And alarm bells ring, and then the whole thing unravels for them. And you know, generally this happens very, very often. And like I say, some people go out to intentionally commit fraud and they may not even be trading Forex. Some people go out and say, you know what, if I get 100k, maybe I'm going to make some money. And they lose money and they kind of say, oh, I'll get it back, I'll falsify my accounts, but like kind of Nick Leeson type of thing. He never intended to, he sort of got caught up in the thing, and once he started committing the fraud, it was game over. It was just a cycle. And so, you know, this is what happens, the falsifying of accounts, and then it comes to light and it turns out they've lost all the money and all they've been doing is soliciting more funds and just keeping these guys appeased with some false accounts, but paying them back in some kind of small amounts of dividends or profits, so to speak. So watch out for that. Returns that are too good to be true. No losing trades or losing months, quarters, weeks, whatever that is they're pitching, and high lockup periods. And also use your kind of intuition, guys. If the character's a bit dodgy and you think, ask him a few questions. And anyway, you know, as traders, we probably wouldn't be even entertaining this kind of thing. But if you have somebody who knows, if you know somebody who's been sort of approached by somebody for this kind of thing, be very, very cautious and, you know, ask them a few questions about what they're trading, what's their trade, ask to see some kind of trades they've taken, maybe ask them to talk through their strategy, all this kind of due diligence, but being very, very wary about this kind of structure, guys. So that's a Forex Ponzi scheme. Keep an eye out for that, financial scams to avoid. All right, guys, see you in the next one. Take care, keep your risk managed. Goodbye.